Well, it's time to get some business news for you now. Kate Moody is with us in the studio. Hello there, Kate.
Hi, Laura.
With those US midterm election results still coming in, you have been looking at how the new Congress will shape economic policy going forward. Tell us more.
Yeah, well, Republicans were in a very strong position heading into Election Day. The American economy is booming. Unemployment is at its lowest level in nearly 50 years, and consumer spending is strong. President Donald Trump has signaled he's open to bipartisan cooperation going ahead to keep that momentum on track. But with government revenue dropping and international trade tensions on the rise, there are a number of challenges ahead. Georgina Robertson takes a look.
A more polarised Washington is often welcomed by investors. If both houses fail to agree, the status quo is likely to be held.
Gridlocked US Congress actually is quite good for markets historically. So in some ways, this is exactly, as you said, what we expected. And it doesn't give either party licence to run riot on the House. On the downside, it does mean that perhaps a fiscal stimulus, a big fiscal stimulus, is less likely.
With the Democrats in control of the House, the NAFTA trade deal now stands a greater chance of survival. The new trade agreement between Mexico, the US and Canada cannot be implemented unless ratified by Congress. The midterm results have made that less likely. None of that will change the president's ability to impose trade tariffs such as those at the heart of the dispute with China. One subject where the House Democrats and the Senate Republicans may find common ground is on infrastructure. President Trump has proposed a $1.5 trillion fund, of which only $200 billion would be government money and the rest from the private sector. Democrats are likely to resist putting this much into private hands. In October, international organisations and the Congressional Budget Office reduced their growth forecast for the United States. The CBO projecting growth to slow down from an expected 3.1% this year. The president's $1.5 trillion tax cuts appear to have given only a temporary fizz to the US economy, and business investment has slowed. Individual tax cuts, while proving popular, have put huge pressure on the budget and are expected to see the deficit rise to $1 trillion next year, a level last seen at the height of the financial crisis.
The stock markets have broadly welcomed the mixed results of Tuesday's vote. Wall Street trading strongly up. The Dow Jones has jumped more than 400 points this hour. The Nasdaq gaining over 2%. The likes of Amazon and Alphabet boosting the tech-heavy index there. The major European markets also jumped about 1% each. CAC 40 up about 1.25% on the close. The retail sector outperformed and banking stocks did well, especially in Spain, after a Supreme Court ruling there said lenders wouldn't have to pay a tax on mortgages. Now, as we heard in our earlier report, the new makeup of the U.S. Congress is unlikely to impact the ongoing trade war between the U.S. and China. The world's two largest economies have imposed tariffs on more than $300 billion worth of each other's imports in total this year. The airline industry has so far managed to skirt any direct damage, but at the biennial Air Show China, the tensions remained center stage. Ivana Scatola reports.
Showcasing their latest aviation ambitions, plane makers from all around the world are putting on an impressive display at China's largest air show. But there's concern that the industry could soon fly into turbulence as a damaging trade war between Washington and Beijing rages on. So far, American firm Boeing has escaped tit-for-tat tariffs, but it could be the next victim if things escalate.
We continue to engage with the leaders of the United States and China to continue to urge a productive conversation. This is a rapidly growing market, and the demand for lift is unprecedented. And we believe that at the end of the day, both parties understand that.
US-made aircraft are among the country's biggest exports to China, and any escalation in trade tensions would bite deep for Boeing, which gets 1/5 of its global orders from Beijing. Although European plane maker Airbus could be set to benefit, one of its top executives insists the company doesn't expect any kind of sales windfall.
We don't like this kind of trade war. I think nobody will be the winner of this kind of trade war. This, of course, will have the negative impact on the aviation growth.
China and the United States have sparked hope that a breakthrough could be around the corner after President Trump spoke to President Xi Jinping last week. Many are hoping that the two leaders can reach a deal on the sidelines of the G20 summit, which takes place in Buenos Aires at the end of the month.
France is on track to welcome a record number of foreign visitors this year. The government's junior minister for tourism has told Le Figaro newspaper that arrivals are expected to top 90 million by the end of 2018, bringing in some 57 billion euros. The administration hopes to attract up to 100 million people by the year 2020. After a dip in numbers following the 2015 terrorist attacks, tourism has rebounded strongly across France, and the country remains the top tourist destination in the world. Meanwhile, the tourist industry in Brazil fears that the polarizing new president could have a negative impact on its business. Jair Bolsonaro will be sworn into office on January 1st. He has been outspoken in his praise of the country's former dictatorship. He's also made several controversial statements about women, race, and human rights. Some in the country fear that could be a turnoff to prospective visitors. Brazil is, for now, the most visited country in South America, and tourism plays a crucial role in the struggling economy. Now, the way that geopolitical concerns impact tourism was one of the big issues being discussed at the World Travel Market in London this week. Our reporters Haxi Myers-Belkin and Karina Shabor were there, talking to the head of Brazil's tourist agency.
Brazil is a warm country. Its people are especially welcoming. They like to host visitors. We hope that the next government will share that vision so that Brazil can continue to welcome travellers. The president should see tourism as an economic force that creates jobs and salaries for the Brazilian people. Tourism also creates new opportunities and helps to reduce inequality. And we hope that the new government will continue down that path.
All right, now our reporters have also done a special report from that ceremony about the British tourist industry and how it's worried about Brexit. That's in People and Profit on air at 4:15 a.m. Paris time.
All right, Brazil or the UK for your holidays. It's a tough one, isn't it? All right, Kate, we'll have to leave it there. Thank you very much indeed. Kate Moody there with the business. We're going to take a short break. Don't go away. Much more still to come.